Today, we are talking about the 15-minute opening range strategy, how to identify the 15-minute opening range, and how to execute trades. Let's break it down today. Not the sexiest, not the best 15-minute opening range, but either way, we can still show you how I identify it and what I'm looking at and all of that fun stuff. So obviously right now, we're on the 15-minute chart. You can see this is a 1 hour chart, a 5-minute chart, and then now back to the 15-minute chart. We got our pivot point there. We got our VWAP there. Now, we know the market opens every day at 9:30 a.m. You know, normally the New York session starts at 9:30 a.m. So we know that there's a candle that would be from 9:30 to 9:45. That would be a 15-minute range, right? That would be from 9:30 to 9:45. So if we look here at the 15-minute chart, and obviously now the market's already moved well past this level, but as we can see, that first 15-minute candle of the day. So here's the 9:15 candle, the 9:30 candle, and then 9:45 candle. So the 9:30 candle is the one that we're focused on here because, again, that's the first 15-minute opening range, right? The market opens, it has a range for the first 15 minutes, and then that gives us an idea of where the price action is and what is going on from there. So today, very insane type of price action today, but you can actually see that later on, the market did kind of respect the 15-minute opening range, you know, at 11:30, and then started to make that big move up. So if we go now and we look, 15-minute range, the high there, 64, 63 area. The low of the range was 79. And you can see we kind of chopped around inside of that range for most of the morning here. And then we break out. And what's interesting about this is even though we broke out later on at, 11:30, 12 o'clock, look at how we turn the 15-minute range into support, and then we push off of it. So the first 15-minute candle, the high of that candle was 66s. That turned into support. We got what? What did we get? You guys just watched this video. We got a bull flag, right? The market pulling back here. The market's pointing down for the bull flag. We had momentum pushing up, momentum. The high of that 15-minute range playing out beautifully. And you guys can see everything that you're learning here. It's all building on top of things, right? Momentum. Where's the trend going? Which way is the trend here? The trend is obviously going up here, breaking out. We see the trend is higher. We see the bull flag. We see the bull flag. We saw the bull flag there earlier. So the overall trend is going higher. We're putting in higher lows, higher lows, higher lows, bull flags, bull flags. But again, 15-minute range. Remember, just go to the 15-minute chart right there at open. You know that first candle of the day. You're going to be able to identify that very easily because, well, it's the first 15-minute candle of the day. You draw your lines out there, and then we want to see how the price is interacting with these levels, right? We'll talk more about kind of the trades, the ideas of how to take these trades, but the big focus is just understanding that if we're in the middle of the range, the middle of that 15-minute range, we expect choppy action, right? We want to stay out of the middle because if you're trading in the middle of the range here, if you're just in the middle of this range, well, you can see the market went up, it went down, it went up, it went down. You don't know. You don't have a clear indicator of why it's going to, you know, where it's going to go and those types of things. So we really want to stay out of those middle areas. And the 15-minute opening range is perfect for that because it allows us to obviously have a very good range to look at for that move at open and then to focus on this level. Pretty much like I said, all day long, it's valid. This is a very, very strong kind of support resistance. You know, that first 15-minute candle, the opening of the market, the move later on, 12 o'clock, we finally break out there. If you look at the previous day here, this is a really good, this is a setup here, same thing, right? We got our 9:30 candle right there. 15-minute, the market opens here, it starts to dump. It bounces. We get our next candle right there opening. And I want to show you here the secret to the sauce here. All right, there's the today. We go over here. This is yesterday. So we see our 15-minute range, very clear. Bang, bang, bang. The opening candle, we get down to this low. We break to the downside. Look at how beautiful this break to the downside was. So we broke right through the low of that 15-minute range and then went all the way down there. What's nice about this is we had confirmation because why? We had a bear flag, right? We know about bear flags. Bear flags point up, bull flags point down. Don't forget what you're learning here, people. And then you see how we break to the downside there. We break the range and moved about 200 points or so to the downside there, out of the 15-minute range, right? Beautiful. But who would have thought? Maybe later on in the day, this level is going to be important once again, right? Why? Well, maybe, even though we broke to the downside there at open, guess what? Now we're back in the middle of that range here at 11 o'clock, and we're back above the VWAP. And look what happens. We break out of the 15-minute opening range. We pull back, we chop, and then we start to turn it into support, and then we get about another 200-point move up from there. And again, it just keeps playing out. Later on in the day, it acted as support there, and then the pop, and yeah, it was definitely a wild ride. But again, 15-minute opening range. This is a very strong level, very easy to identify, very, I would say, simple rules for trading, right? Very simple rules when it comes to trading this, because you know that all you need to do is wait for the first 15-minute candle to close. Once the first 15-minute candle closes, well, then you know that, okay, I have a pretty good idea of where we're at. Are we in the middle of that range? Are we at the top of the range, the bottom of the range? And try to look for an opportunity. This trade here worked out beautifully, right? So we get the bear flag. We push up to the VWAP, got stuck. We pull back. We enter when we're breaking the 15-minute range. And you can see here from 107 down there to the 950s. Could you enter this two different ways? Could you wait for the break and then the retest? Sure. I think with this type of setup, having that bear flag right there kind of playing out perfectly for the break to the downside gives you more confidence to be bearish there on that move, right? Because you're like, well, I just saw a bear flag play out, and I believe that it would want to, move down here because now we've already got kind of that bearish confirmation. Again, the trend is pointing down here. The trend is pointing down. Well, the trend's pointing down out there and then keeps pointing down. Then it starts pushing back. But again, 15-minute range. We push back up. We turn it into a little bit of resistance. We finally break through there. We're back in the middle here. The middle now is kind of acting as support there. We're bouncing around the VWAP. You can do this every day, obviously going back, and you can draw the 15-minute range. But in terms of like forward testing, it's pretty easy because if you're just starting out, if you're just learning, you can basically pull up the chart every morning, look what's happening, see this range, identify the range, have a game plan based on that range, and really be able to, I think it helps you avoid trying to trade that opening chop sometimes. You get that opening move and you're like, oh, I could have jumped in. But knowing that the 15-minute range is such a powerful thing that can really help you avoid, kind of staying out of the bad moves, I guess the best way to think about it. Like the 15-minute range really is like a way to create a rule for yourself to follow so you avoid the FOMO, you avoid trying to trade that first move of the day. You're patient, you wait. Sometimes the 15-minute range doesn't break for a few hours. If that happens, you got to have the discipline and the ability to not take trades because you're like, hey, I've adopted the 15-minute range strategy. I'm owning this. This is my strategy. So I'm not going to try to trade if I don't have a setup. And that's the biggest thing, right? You have these setups, you have these plans, but there's no point in, going through all this effort to learn everything if you don't end up following it later on. Because if you just day one, you first start trading, you just start doing everything that you're not supposed to do, well, you're going to end up losing and having a very bad experience. So create plans, create ideas, follow those plans, follow the ideas, and keep just kind of building on top of all this. 15-minute range. Some people say the 5-minute range, the 1-minute range, whatever you want. You can really kind of figure out what works best for your trading style and kind of just really keep on tweaking. That's the best part about trading is you're like constantly kind of tweaking and trying to figure out, what can you do to maybe reduce your losers? How can you reduce, jumping in FOMO or reduce, just the different emotions that we have as humans. And I think the best thing to do really is to have a very kind of clear understanding of what your plan is, what you're going to do, and the 15-minute opening range gives you that pretty much just by identifying the first 15-minute opening candle. You know, you don't have to be a rocket scientist to basically look at the high and low of that first 15-minute candle and be like, well, okay, if it breaks through this low or this high, there's a very good chance that it continues for another 30, 40, 50 points, whatever, in that direction. So there it is, the 15-minute range today playing out from there, the 160s. That's about a 100-point move to the upside right there on that. So you got to love it. You got to love it.